Giuseppe's always great to talk to. Mr. Footprint, Giuseppe, I just passed you the controls. You have control over our television set now. Hey, Giuseppe, how are you, buddy?
Hey, good morning. How are you? How are you?
I'm doing okay. So, wow, the dollar really expressed itself last week with the ECB. You know, I know that you look for program trading, the algo footprints. Did it anticipate what Draghi was going to say? Because all the news out there was saying, oh, they're going to end QE and raise interest rates. And I know a lot of people got long looking for the euro to advance and bottom pick it, and they were creamed.
Actually, I was looking for a deeper retrace here, and I'm showing you the trace here. My trace was this one. And as you can see, you know, the dollar index was much more aggressive. So it started moving out of a different anchor here. But the, you know, when we look at last,
yeah, go ahead. Yeah, I missed it too. I was looking for 92.50 before this happened, but go ahead. So you have some fib levels above it to where it could head to, where the smart money. Go ahead.
Before below, because you know, this level here, the 87 level here was not completely unexpected. In fact, it was a 50% retrace from the lows in 2011 to highs in 2017 here. So I was looking for something to happen there, and there is also as usual, the other side of the coin, right? I mean, we have been following the euro together. I believe now it's more than I think it's almost 5 years. And you remember when we were looking at this chart, I think back in 2014 now.
Yeah, the big fall from 140.
Yeah, so you will remember this was the you know, the second test here on 2012 when Draghi said, you know, we're going to do whatever it takes to save the euro. Well, if we look at the chart, obviously, you know, something is wrong there. What happened is, you remember this, sorry, it was a 139 here, so it was the highs to the low here, the dip into the 120 area, and that brought price into the first segment, right? Most importantly, as you can see here, with this piercing of the 21.19 here, sorry, 21.97 here, basically we lost any support for longs, long-term support for longs in the euro. Now, look at what happened recently. And it was very interesting what Blake was saying before. You know, I was prepared for something like this, and that's our next measure move in the euro. So I would totally agree with Blake, that we might see something going on the second part of the year here, or even at the beginning of next year. But
we're
the
under
euro
103, not 95-ish, huh?
Yeah, I mean, I have a clear target for the euro here, which is 95, and if he gets there, it has the potential to get to the bottom of this range here. Of course, we're talking about long-term moves here. So, in a way, the euro dollar was the other side of the coin of the dollar index, was basically confirming, while the dollar index has traded a 50% long in here, the euro has traded the next measure move short. So that's what I see here.
Okay, so let me use your terminology. Smart money will be selling rallies, and dumb money will keep trying to buy the dip.
Yeah, well, dumb money, they see the small, the big lower, right? So at the moment, they are kind of aligned, and if we bring dump money in here, I use it simply.
Oh, look, you even use dump money.
I use moving averages to model dump money, and interestingly, Blake also mentioned before the break from this formation here, but we already have a setup. We already had a setup short in the and as you can see here, it seems here that dump money is aligned with smart money, because now dump money is looking at this big move lower, right? So they also anticipate the market continuing lower. But we also have a smart money setup here, and as you can see, I mean, it's been respected very precisely here recently, and we have targets below already, 113.60 and 111. That's what I see.
Okay. Let me ask you this: when you're not always right, no one is.
Of course.
When you're not right, and you're trading smart money levels, does smart money become dumb money, for at least that occasion?
Oh yes.
So even smart money could be dumb money.
I mean,
and dumb money could be smart money sometimes. Huh?
Well, I mean, I think so. Meaning that nobody's ever right, and I use simple models, right? So they will never be able to capture everything. I think you know, I made many mistakes, at least a couple of mistakes in the US dollar Japanese yen here, following the model.
Okay.
I think we discussed that as well.
So my God, with your outlook on euro, you must be looking for a sharply higher U.S. Japanese yen, are you?
Well, I mean, if I look at the models at the moment, we are moving laterally. We are moving laterally, but we are doing this on top of this large 50% here, the 170 that has traded back. And sorry for the digression here, but because you mentioned the dump money, right? Let me show you how I believe the dump money will work. Now, when I
love when you talk about me.
Well, but you're not dump money. You have too much experience to be tagged as dump money.
I'd rather be some kind of money, dumb, smart, than no money.
No, but look, I mean, these are just models, right?
Right.
These are just models, and we just use. I just use them to try to put some order in a mess, because prices. Right. Price is a mess, right? So it's just a way to put it. I'm sure you have, you know, many ways to put order in the mess. For example, the RSI, the third drive. That's something that I hear you mentioning a lot. So that's something that.
One trick pony, Giuseppe.
Pardon me again.
One trick pony.
Hey,
so all right, so
money, that wouldn't count. If that trick makes money, that's
all you need is a trick. So to me, it looks like a symmetrical triangle. I know that's not really your stuff. You're looking for the footprints. So where are the footprints that smart money is leaving on the beach in yen now?
So large time frame, very large monthly. There was a long participation at 170. So I'm sure there are you know, many professionals and algos as well, and group of algos who are long on this large time frame. When we look at the daily and weekly and daily here, we have at the moment, the only thing I can say is I can see as well is a market oscillating between 108.78 and 112.43. Now, normally what I would say is that because we have this large setup long, this consolidation here should, but we don't know, resolve on the upside. The problem here is that if we get a risk-off stance in the market, we could see the US dollar Japanese yen retesting this 170. I just want to mention the dump money before, right? So let me show you the way I see it operating here. And these are simple 10 EMA and 30 EMA, which identify value area, which is the area within the two EMAs. Now, when we look at the 170 here, when it traded, there was some commitment when we started seeing this participation on the upside here. Clearly, that indicated some commitment from professional program trading at the 170, right? But dump money was still looking at this huge move lower. So whenever they took the opportunity, they pushed that price back lower into the area which is controlled by algorithms. And that's why we saw participation, price back, participation again with algorithms buying even more, price going back again, and now at the end, of course, large participation from program trading always wins, I believe, and that's what we're seeing here. But again, these are models to try to put some order in the mess.
Okay, so the bias is to the long side based upon a setup from what, a year ago?
Yes.
Okay.
July, well, 2 years ago now. It's July.
Oh, wow. Okay.
Yeah.
And this may just be a pullback before we get something equivalent to what we had off the 16 bottom, which was what, about 1,800 pips. If we got that from say 106, 104.60, that would take you to new highs, wouldn't it? It'd take you to, or the old highs, back to 22.
This larger time frame here, it has targets above 137.73.
Wow.
And, of course, we're talking about targets that take years to materialize, right? If the market, I mean, if ever the market gets there. At the moment, you're seeing a little bit of weakness, I believe. Are you interested in the SP 500? I follow.
Yeah, sure.
Very closely, and this is very interesting and technical market, as you know. Also on this one, I think in 2014 we were talking about the levels, and this is the SP mini futures.
Right.
And you remember that we traded that 666 back in 2009. Someone was having fun there, I believe.
Yeah.
And basically it was this level here. Now, this is the continuous contract of the SP 500. So you see a break here, but in reality, that's only the way it is calculated, because the low was 666. Okay, so the low was this one within the 61% level. And you remember that I mentioned always 1916. Now it's 1963 because of the way the prices are calculated, but doesn't change. And the second target was 2,500. Price went well above that level there. Okay.
Right.
Now, in order to understand what happens next, I always keep tracing the sequence of measurements. So we had October 2014, we had 2015 and 2016 lows here, right? So let me remove the large one. And so we saw price getting into first and second target, and well above it. Now, something that is not traded yet, at least in my models, and they're pretty, they tend to be pretty reliable, is this level here. This level is never traded before, but this is the next in line. If we want to a healthy market, what it would do in my models would actually trade this level and bounce.
Okay, so where does that come in? Around 2480?
2490. That would be the level. So I believe that if we get risk off again, and we get a big move lower here, maybe in conjunction to the seasonality here, starting basically now, July, mid of July. I'm doing a study on seasonality, which is pretty interesting. I'm going back 70 years, grouping data in ways, and basically what you always see is July. It's not May, sell in May and go away. It's actually sell on the 15th of July and go away. That's the time when seasonality kicks in.
Into October? Is that what it's showing?
Correct. Into October, either the beginning or the half of the month of October. So, so
let me ask you this. We talked, when the market was heading down, into this 20, 500 level, 2550, and it never got to, where you thought I think you were thinking 2470 or 90 back then. But you said that even though you're looking for this, and I think this speaks to your discipline, you made a comment that you will not participate in this drop. And is that because it's counter trend and you're just going to sit back and wait for the buying opportunity after the sell-off? Is that your style?
The only tool that would help me in this short, and I didn't get this short, was dump money. The smart money cannot help me with this because I have no reference in here. If this was the start of a bear market, then we would have some reference and we could start tracing the sequence of measure move lower. But the market is moving higher, right? I mean, the market is an upward market. Now that said, there was this low here. There was an inner measure move here, and let me show you how we could get there. Now that said, inner measure moves are always more difficult to capture because they are because you need to study the markets but basically this high here, this was the anchor that was used to basically hold the market. Again, I'm choosing this after the fact, not before the fact. This level, the 2536, could offer support again if this market starts moving lower and continues into its 2490. But 2490 is a very solid level. It's a multi-year level that actually satisfies the model here. So this is very strong.
Do you have anything? What's your red level under 20? The red line is 2490.
Well, no, the red line is 2395.
Oh, okay. So
and we could be in trouble, real trouble.
Okay.
Because if we go below 2395, then this market is exposed. Doesn't mean that it's going to do that, but it's exposed to a potential drop into basically 1400, right? That'd be 1443. So these models, I basically they hold back onto the data of the SP90 and back to the Dow Jones since 1890. So basically this model hold on the markets in the last 120 years. So when something like that happens, I really take note of it. And
well, you've really given us some pearls. I mean, you've given us some very long range targets in euro, and you've broken down the
I'm glad I can help.
Yeah, well, you know what? You could also help people that are interested in your method, which, has my full-throated endorsement because I've watched you trade. And if you want to show your website and how people could get a hold of you, sign up for your classes, because I know you have an appointment coming up. So.
Sorry about that. I'll let you go in.
You gave me enough You gave me enough information to make $1 million today, buddy. All right.
Yeah, you need another $1 million to make $1 million with this. But I'm
making thousands of nickels. I made 1,000 nickels last month, man. All right, go ahead.
So this is the website, FibStalkerTrading.com. FibStalker, it's my nickname. It's Fib. You saw the way I use Fibonacci. I don't use Fibonacci in a conventional way, but rather an unconventional way. And if I may, the way we model the markets, not only to find low risk opportunities, which are represented by these 50% levels here, but also, as I showed you in the example, also to try to actually find a structure in the market, see where the market is going. Okay, so I think that's one distinctive element of the methodology. And I offer a free package. I mean, if you wanna come on my website, have a look a little bit at the narrative here, what we look at and why it is important, why algorithms are important. There are a number of free resources you can have a look at. There is a free 6-hour course that you can you can download, you can get access to as well. It's a video course. I mean, and you know, if this methodology resonates with you, it can be very, very useful. It does not always resonate with people, not always, like everything else. Just because as you can see, I don't use any kind of indicators in order to understand what's going to happen next. And the last thing I want to say, thanks Dale for allowing me, is that we never blindly buy these 50% levels. In fact, we use the same structure on the smaller time frame in order to decide when the algorithms are participating around these areas, and this gives quite a good you know, take on what's going on actually, right? So I have some testimonials that have been working. Thank you, Dale. I mean, you are great as usual.
Yeah, so visit Giuseppe's website. He's the Italian stallion of FX, and you know, and he's like, you know, like Rocky of FX. So you know, don't mess with him either. He rides Harleys. Okay, so you know, he's I had the pleasure of meeting Giuseppe. He rode a Harley out to see me in its leathers. So you know, check him out. You could follow him on Twitter @FibStalker. And his website address again is www.fibstalker.com. Thank you for your some of your macro outlooks, Giuseppe. I was kind of struggling as to, you know, whether or not this was going to be just a correction in the dollar, but some of the numbers you talked about in euro tell me that the dollar has a long way to run, although there's going to be corrections along the way. Very valuable to know your outlook in the dollar. I appreciate it.
I share the view of Martin Armstrong when it comes to the dollars. A lot of people, you know, doom and gloom. They're afraid of the dollar crashing, but a low dollar is good for the world.
Right.
We have to be worried about a very strong dollar.
Yeah, that's deflationary. I mean, that's why gold's going down. I'm sure you have the same view in gold, but the S&Ps could blow off even with this dollar rally. Sounds like you're looking for about a 120 Dixie with your euro targets.
The euro?
I'm just ballparking.
The euro, you know, previous lows and possibly even lower, 0.95.
Yeah.
0.96. And the dollar index here, I mean, it has a
107.
Yeah, 108 and possibly even higher. But you know, we really don't want to see the dollar index there. I mean, if we see the dollar index there, you'll start seeing emerging markets not being able to pay their debts. I mean, it's going to be a complete disaster.
It'll be a liquidity crisis. Everyone's going to sell the kitchen sink to raise cash, and then the dollar will be king. And since Larry Kudlow has recovered from his heart attack, I'm sure he'll be talking about King Dollar if we get up there. So great talking to you, Giuseppe, my trading water brother.
You have a great day, and thanks for thanks for having me.
Okay, everyone, thank Giuseppe, and go to FibStalker @FibStalker and www.fibstalker.com. You're welcome, Paul. Everyone enjoyed you, Giuseppe.
Thank you very much.
Good hunting, buddy. Keep in touch.
Thank you as well. I will.
Thank you. All right.
Bye-bye, everyone. Right. Thank you very much. Okay.
That's a wrap for our Monday session. See everyone for Turnaround Tuesday. Don't just count your pips, count your blessings. See you tomorrow. Good hunting.